So hello everyone, my name is Freddy, as we just mentioned. I'm CEO and co-founder of Kudos. Kudos is a credit reference agency, so that means we provide credit scores. And before you all leave the room, I want to tell you why that's interesting. So remarkably and comparably to the incumbents in our space, we're a technology company, we're pretty lean, we're pretty small, we're backed by some of the biggest funds in Europe, but also, and what I want to talk about today is we were the first company to deploy open banking or PSD2 based risk models. And those allow our customers, so lenders, to accept more clients, so people that they were previously overlooking, do that much faster, and also decrease defaults. So really, really interesting, three important improvements that we can provide with this new source of data. So what is a credit score and how do they work today? So basically, when you try and lend money, you want to pick out the people from the sort of ether, from the internet, that are good to lend to. And typically what happens is you end up with some amount of good and some amount of not so good. So people that don't repay, that default and cause you cost and pain. And so when you try and build any kind of credit score, you're basically trying to optimize for precision and recall. So precision being the accuracy, so the bit that you get right, plus the bit that you don't, what percentage you're looking at that's correct. And recall being, more importantly, the sort of overall universe of customers that you're actually lending to. So increasingly, businesses accurately lend to the customers they know well, so typically the prime customers, but they also reject a bunch of good customers, so what you'd call false negatives, that they could be lending to. And a big part of what we do with open banking and PSD2 data is find that overlooked area and allow people to lend successfully. So we want to move this over to the left, essentially. Just a couple of stats on why this is important. Hopefully this is all revision, but over 37% of people in the UK get rejected due to lack of credit data. So that could be just because they don't have regular employment, or they're on a gig economy agreement, or for whatever reason they're not tracked at a credit bureau. There are over 420 million credit searches in the UK annually alone, and about 920 billion in consumer lending in Europe last year, so massive. So credit scores today look like this, really simplistically. So this is an abbreviation of the FICO model, the Fair Isaacs Corporation, and basically it's a blend of credit you've borrowed in the past, the amount that you've borrowed, whether you paid it back, the length of that history. So, for example, if you're new into a country, that's 0. And also a little bit about you, so whether you're registered to vote in the UK specifically, and your address, and simply what your postcode says about you. So what we're doing is augmenting that with what we're calling financial health, which is really just an accurate portrayal of how healthy you are with your money. And that's something we can now do with open banking. Our solution takes open banking data and blends it with loan outcome data. So if you imagine when a customer applies through our process, we collect through their consent, their banking history through PSD2 APIs. We also then, as a regulated credit reference agency, we see loan performance. So did Freddy repay or not after the loan was granted? And infusing those two things together, we can build risk models. So to give an example, we might see that my bank statement balance looks like this. It's normally going the other way, but and my outcomes look like this. So month 1 I paid, month 2 I paid, month 3, and month 4 something went wrong. And then on scale, on aggregating all these different data points, we start to build predictive models, because we can use supervised learning to say, well, what is it about the before that correlates to the after? And therefore, when someone new comes along that I've never seen before, maybe someone that's new to the country, maybe someone that's not got a credit history, can I fingerprint and use their banking data to predict risk and see what the outcome's going to look like? So that's how our solution works. Our platform's made up of 4 parts, so really quickly, aggregation, so we connect to all the largest banks in the UK and Ireland, and now also in Europe. We build classifications, so understanding what exactly that data means and building lexical meaning from it. We then build risk insights and risk scores on top of that data, so allowing people to lend faster to more people and reducing defaults. And this is a quick high-level example. So on the left, you're seeing our integration in a lending site, so in this case, Mojo Mortgages in the UK. And on the right, you're seeing the produced results, so our credit report that an underwriter would look at. We've proven this works, so we've sped up evaluation time. we've increased acceptance rates, and we've reduced defaults significantly in some cases. And we're also growing pretty rapidly. So 50 clients in the last 12 months. We've tripled in size. We won a bunch of awards, hopefully some more. And we've proven these three things. So faster decisions, increased acceptances, and reduced defaults. Thank you.